Talk a little bit about that specific sentence, right? So market participants can source on-chain data to analyze Bitcoin in more depth than is possible with any other traditional asset. Sounds like a big statement. I tend to agree with you, but elaborate a little bit.
It absolutely is, but I believe it is true. And I think that goes back to the nature of, what these assets represent and what they are at their core. So first off, when you think about, an institutional investor's approach to gaining exposure to different asset classes, they always want some sort of fundamental framework. Now, or some sort of framework to analyze fundamentals. Now, the interesting thing is that Bitcoin doesn't really fit in the framework of traditional asset classes. And so because it doesn't, they automatically assume that it's impossible to analyze fundamentals because it doesn't have any fundamentals. When in reality, if you look at what they are at their core, right, these public blockchains, they're auditable, they're open, they're transparent software, which means that today anyone can pretty much download a Bitcoin client, install a node, and extract insightful network data with pretty much no barriers to entry. The analogy that we give in the piece is that, in the same way that a government statistical agency might publish data about a country's population or economy, or a public company is going to publish quarterly financial statements disclosing growth rates and earnings, Bitcoin, and by extension, public blockchains, provide this real-time global ledger that publishes data about the network's activity and inner economics. And so anyone at any time can go and really understand, buyer and seller behavior, long-term fundamentals, and see, where the market is at any given time.
You've got a section in the report that says assessing the health of the Bitcoin network. And we have this table where you basically break down, okay, if we're going to assess the health of the Bitcoin network, there's kind of three ways that you cut it. You cut it by monetary integrity, you cut it by security, and you cut it by usage. And so talk us through kind of why are these three pieces, the three kind of aspects or cuts that you look at when you evaluate that layer one of assessing the health of the Bitcoin network? Like why these three?
Sure. So I think it goes back to the core of what Bitcoin is as a, non-sovereign monetary system. When people talk about what Bitcoin's value proposition is, it's not, all the bells and whistles that Bitcoin has to offer. It's the fact that it's really competing as a global based money in a decentralized way. And so the paradigm or the mental model that needs to be adopted when analyzing the fundamentals of the Bitcoin network, I think should resemble how you'd analyze something, how you'd analyze a monetary system. So first and foremost is around monetary integrity. I think the reason why Bitcoin distinguishes itself as a monetary asset relative to other public blockchains is the predictability in its monetary policy. I believe that at least what Bitcoin is competing on isn't a monetary revolution, not a technological revolution. And as such, being able to, not only verify your holdings at any given time, but then verify this total circulating supply is a fundamental feature in Bitcoin. And if it were to break, would ultimately, not bode well for its underlying fundamentals. Now, how does monetary integrity remain intact? Well, you need to have a secure and robust chain where the economic incentives are well aligned. And so, when you think about specifically the dynamics between miners and nodes and developers and users, making sure that the network is being secured as designed is again a fundamental is fundamental to understanding the health of the network. So I'd say on a weekly basis we go through these on-chain metrics just because we manage around some of the volatility, and the most recent sort of metric on hash rate where we've seen a full recovery. Well, if you don't count yesterday's drop off from the Kazakhstan internet shutdown, since basically China's migration or hash rate migration out of China. So the ability for Bitcoin to recover within 6 months the hash rate levels and effectively put to bed that China controls the Bitcoin narrative is really important to understanding and having high conviction in the long-term fundamentals. And then finally, around usage, it's really thinking about, the Bitcoin is being used as this, global settlement network that active addresses are hovering between 800,000 to a million at any given time. That transaction volume this year, I think adjusted transaction volume, we've seen $13 trillion worth of volume settled, which exceeds now Visa's total transaction volume and is, within an order of magnitude of the Fed wire. So there's, a lot of interesting and compelling data points that allows us to assess the long-term fundamentals, but that won't necessarily inform us on, what price is going to do.